Good morning, and I can say good morning because it's just on midnight, and I wanted to see what Asia was going to do with the stock markets before I did this report. Now, we took out on Friday we took out the yearly low, not by much, by a fraction really, but we took it out nonetheless. The important part was that we closed below the 200-week moving average. We closed below 38.2, and our weekly pivot going into this week is 69.68. If this is to stand any chance of correction at all, now's the time it has to do it. We need to get this back above 69.87 on a close basis, preferably at the end of next week, but you know, during the week, if we can get back above that 69.87, then FTSE does stand a little bit more of a chance of beginning to correct back a bit further. I don't think that before the end of the year we're going to still be at these levels. I do think we come lower, especially if this week coming we cannot break back above, as I said, the designated resistance area. If we can't break up, like anything else, what can't go up has to come down. Now, if we can't break back above this 69.87 on a close basis, and we continue down and we take out this area here, which is now going to be our yearly low at 68.51, we're looking at 67.03. Now you can see from way back over here, okay, that little cluster down at them lower levels. I remember drawing that trend line on, good God, all them, you know, all that time ago. I've still kept the line going. But we're talking around about, you know, 2016 to early 2017 levels. If we can not go above here, this is where we're going to come back to. You know, if you're looking at a chart, you can see that quite clearly. You can see this cluster down here. And when anybody is looking at these longer term charts, they use charts that are very visual. And because they're very visual, if you just whip across your eyes to the end of 2016, you can see where the market actually came back down to after it made all-time highs there. It came back down to this area. So before the year end, if we can't get above here, then the natural form would be for the sellers to try and take it down towards this area here. Now at 67.03 you've got the 50% fib, but you've also got, it's not just fib levels, you've got 66.76, you've got 67.54, you've got down here, you've got 66.54, 66.15, all this area here. So be very, very careful. You may get a pullback initially at the beginning of the week, but it's got to be sustained. And this is trending lower. Everything I'm looking at and that have looked at since around the summertime has showed me that this market is in trouble. You know, it is. And to go against it really is at your peril. If you don't want to go against the market, you have to look for levels to sell it. We're in a sell rally, not buy dips scenario. Yes, we can attempt longs if you're very, very short term down at that 68, 60, 68, 51 type area. If you can do it very, very short term and flip it for a very, very quick profit. Our daily pivot is coming in at 69.31. So it's just under the weekly pivot there, okay? So just keep your eyes on this week. It could be a week that will determine what we're going to do for the rest of the year. Take care. I'll catch you tomorrow.